morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Vakil, the top headlines. Indian markets bounce back from opening lows. Nifty trades about 10,650. India VIX advances. And open interest surges in Kerala Health and Bata as traders take fresh positions in their respective futures. And the government unveils a 5-point Shashakt plan to tackle bad loans. And it's the last day for interested parties to submit their bids for Fortis Healthcare. A foot-over bridge collapses in Mumbai's Andheri area, disrupting train services on the Western Line. Heavy rainfall hampers rescue work.
Okay, those are the top headlines at this hour, but let's also tell you what's happening in the markets and specifically in the futures and options market. Well, we've turned positive for the day, so that's one good news. You've got Nifty, which is inching very closer to its 50-day moving average now, which is at around 10,694. Remember, yesterday's closing was way below the 50 DMA, so if we can cross that mark in today's session, will be a positive sign. But the July futures, they continue to trade at a discount of nearly 2 to 3 points. Look out for Bank Nifty futures, which are already trading above the 50 DMA, but the futures continue to trade at a discount, so 4 points lower. Yesterday, there was a lot of fresh short build-up that was seen for Bank Nifty futures. Let's see if those positions can be unwound, if there is any sort of recovery that comes in for Bank Nifty in today's session. The July futures now are trading actually at a premium of about 33 points. Pull up the India Volatility Index and let's see what's happening on that front. Volatility has been there in the market, so not too much, but 13.5, which is still above the key metric of 12.5, which most of the derivatives analysts usually watch out for. In terms of options strikes, 10,600 put, which is sitting with maximum open interest for the July series. That continues to see more addition actually coming by in today's session. So almost 2.5 lakh shares have been added as we speak. And also watch out for 10,700 as well as the 10,800 call strikes. There's been some bit of interest which has been seen, and it looks like more of buying has come in for these strikes. So the 10,700 call strike has added almost about 2.5 lakh shares. In terms of FIs, what they've been doing, well, they continue to remain net short on index futures. Also, if you look at the options data, they bought more of puts actually for the July series. And if you go by yesterday's data, no major activity happened, but some bit of contracts were added on the short side for index futures. And also, if you look at the index options pack, they bought put long as well as call short contracts.
Well, in terms of stocks, and if we can pull that list out where we have a lot of traction in terms of increase in open interest. So you see that KPIT Technologies once again is at right at the top of the list, around 9.5% added in open interest, even as its underlying advances by around 1.7%. So longs there. And Just Dial is the matter is the same. We are starting to see longs build in there. And Tata Elxsi, which has been in focus over the previous few weeks, we have seen flattish movements right now, although there is an increase in OI as far as July futures go. Indian Bank and NCC among others, which are looking at substantial increase in open interest. Let's take a look at those stocks which are seeing a decline in open interest, and GSPL is one of them. Other than GSPL, which is starting to see some short covering in today's GF trade, not too much to speak for, such as DC Bank, Kerala Healthcare, Reliance Power and Bosch. On the whole, we're watching out for, once again, the IT companies, which continue to gain traction with respect to increase in open interest.
All right, and we'll be watching out for all those stocks during the show. We'll also get you some views on a couple of these stock futures. But before we get our guest in the show, here's a reminder for you all. If you have any queries in the futures and options market, you can call us now on 022-4540. 4141. Write to us on Twitter, Facebook, and for the ones who are watching our show on YouTube, you can write your queries on that platform as well. Just don't forget to add the AskPQ hashtag. Let's welcome our experts then. I think Amit Shah of Bank of Baroda will be joining us in a while, but currently we've got Mr. K. Subramaniam of Altiman Capital right here with us. Mr. Subramaniam, good morning to you, and thanks a lot for joining us today on Bloomberg Quint. Some positive start actually seen after closing off day's low in yesterday's session. How are you viewing the trade this morning on Nifty and Bank Nifty?
Good morning. I think yesterday's move was a bit unnerving because we did have a pretty strong Friday, and the fact that we gave up all the gains yesterday by midday, and then of course we did make some money. So I think the market is not inclined to move above this level of 10,725, 750. I think that is going to be the level now for this series where I think at least the analysts will be keeping the eyes on. And on the lower side, of course, the last series I think we saw bottom of around 10,550. And this time also around, I think we did manage to go up from the levels of 10,580. So I think that could be the range where again we will be sort of witnessing some sort of support coming about. And as far as the bank nifty is concerned, right now I think it's a bit neutral, and KPI will be watching for levels of 26,000, which should ideally hold. And on the upside, 26,500, 600. So on the bank nifty, things are a bit neutral, but on the I think the major the triggers would be come from the nifty. And I think if we could possibly hold on to this range of 10,650 to 10,750, then I think a strong breakout on either side could be possible. So I think that is the space, and we do have some sector-specific strengths coming about, likes of IT, which has held on in yesterday's trade, and also of course pharma has been doing its bit. But by and large, I think it's a bit neutral, and I think this series we could see some strong moves past 10,650 or 10,750, which will probably take the trend accordingly.
In that case, Mr. Subramaniam, how would you employ options in such markets, keeping your point of view in mind?
Yeah, so I think, well, Bas, the range seems to be somewhere between 10,650 and 10,750. I think the premiums are pretty rich. I would go ahead and sell a strangle, 10,650 strike put, that's right now trading at 132. Also sell a 10,750 strike call, that's quoting at around 91. So you have premiums inflow of almost 220 to 225 pips. So that is, I think, inflow which you have. So one could possibly keep a maybe target of around 150 thereabouts and stop loss of 250. So in terms of the risk reward, I think this is the strategy that I would be more comfortable with rather than taking a directional call.
Okay, that's the strategy coming in on the option side if one wants to play Nifty. But Mr. Subramaniam, any individual stock futures that you're keeping an eye on in today's session? Any trading strategies on that front?
Well, I think United Breweries, I think that is the one which actually showed pretty sharp moves last series, and we are, I think, very much looking for some sort of a positive movement coming about on this counter in this series also. So keeping that in mind, I think levels of 1140, 1150, I think currently is trading. I think, but we could see this counter heading up to levels of 1200, and maybe going to keep a close stop loss of around 1110. This is one counter which we're probably keenly watching on. And the second one, which of course comes to mind, is something like a Reliance, which gave up a lot of gains in the last series, seems to have seen some sort of recovery, and now trading at around 980, 981. So I think I would probably, considering the fact that we are now entering into the result season, and the sort of strength that Reliance showed in the last series, and if that is not misleading, I would probably bet with the Reliance and probably go with a 1,000 strike call for buying for this series, and play for a possible upside of maybe around 60 to 70, and maybe closely keep a stop loss of around 20.
Okay, well, there you have it. Those are some of those views coming in. Let's just address some active stock futures. And, you know, I want to address what's going on with the IT companies. Let's take up the mid-cap IT companies. I also want to talk about Infosys and TCS, but I do believe that we have some questions from our viewers, so I'm going to take that up a little later on. Let's just pull up something like an NIT Technologies or KPIT Technologies. Let's do KPIT Technologies because we've seen another up move there, KPIT Technologies, and we've seen a 1.5% increase in its underlying and open interest surging by as much as 11%. Its July futures are at around 277, 278. Mr. Subramaniam, is this up move intact in your point of view when you consider your view on KPIT Technologies? And what would your approach be when it comes to this stock?
Well, any positional trader could possibly keep a stop loss of around 265. I think definitely the overall bias seems to be positive, and the stock has seen a fair bit of correction, and we could be seeing an up move coming about in the current series. But let's not forget this counter has, in fact, in the past series, few series like I remember, showing some pretty volatile moves. So the stop loss has to be very strictly kept in mind. And on the upside, yeah, if we do see a breakout past levels of 284, I think we could head to some newer territory of around 300. So as I mentioned, one has to be conservative with the stop loss. But yes, upside potential definitely seems to be on cards for the company.
Okay, some fresh long positions definitely are being seen for KPIT Technologies, as both the stock as well as the open interest are up in trade. I think we've also got Amit who joins us on the phone line now. We've got Amit Shah of BOBCAPS. Hi Amit, good morning and thanks a lot for joining us. First up, a view on Nifty and Bank Nifty, and also if you could take us, what's the option strategy for the day?
Hi, good morning. So basically for Nifty, if we talk about the rollovers were quite poor to the July series as considering the absolute terms, the market-wide rollovers showed on the short side as well as Nifty rollovers were quite lackluster. So I believe moving on to the July series, there are multiple resistances on the upside where 750 will be the first resistance, above which 850 is the key resistance. So considering the formation, what it has built, it is making a lower top, lower bottom formation, which makes 600 as a key support level for Nifty and 750 till the time it is not crossed. I believe every upside will take an attempt and we will see some kind of a downward pressure. Even looking at the broader indices, mid-cap and small-cap still shows room of 8 to 10% further from here on. So I maintain my negative view on Nifty till the time these hurdles are not crossed. Even for Bank Nifty, if you see, compared to the Nifty, it is still in a slightly better position, mainly supported by the private banks. So for Bank Nifty, it is still holding above the support of 26,000 odd. If it violates 26,000, I believe even Bank Nifty will lose the room for 25,500 odd. So both these indices, till the time it is not showing any kind of comfort level for Nifty above 750 and for Bank Nifty above 26,500, I will be cautious in the market. Where if I believe if it breaks 10,600, the next leg where it can stop is towards 10,440, where the next support level is seen.
All right. So, Amit, I believe that you have a strategy based on these crucial levels, that is 10,600, 10,400. Can you take us through how you would employ options here?
Yeah. So I'm recommending a bear put spread for Nifty, considering we have a decent amount of timeline left for the July series. And even the IVs at this level are quite at a reasonable level. So one can buy a 10,600 put at 120 odd and recommend to sell 10,400 put at around, which is trading around 60 odd. So the net cost or the maximum risk in this strategy is around 55 points. And once it starts hovering around 10,400 odd, one can make the maximum gain. The maximum gain, considering the expiry, would be around 145 odd points. To deploy this strategy, one stop loss I would recommend, which is above 10,740, which was close to yesterday's high. If it breaks above 10,040 or 740, one should exit from this strategy. Till the time it is not done, one can definitely hold this strategy for better gains towards 10,400.
Amit, what about the individual stock futures? Which are the stocks that you're betting on for the day?
So I continue to believe that consumption and IT will continue to outperform the broader markets. Broader markets will continue to see some kind of sideways to negative action. So in the IT space, I recommend TCS. The stock has been quite resilient throughout the last couple of months. You can buy at current levels, keep a stop loss around 850 and look for target towards 1915 to 1940 levels on the higher side. And another in the FMCG space, I like HUL. Now, both these counters have seen a very good traction in rollovers as well as the rise in the open interest since the start of the July series. Even HUL is trading quite firmly above 1650 odd. One can trade with a stop loss at 1630 and look for target towards 1715 to 1750 on the higher side.
All right. Well, it seems that IT is the only space where investors, traders, along with our analysts are, well, potentially asking the viewers to go long on. So, and our next query, there is a query on YouTube that we have from one of our regulars, Ravi Shankar Dabla. His question is on Infosys. Infosys has moved well above the mark of 1300, very strong in trade right now. His question is very straightforward. What's the view on Infosys July series? Let's take a look at the Infosys July futures as well. It's up once again at around 1343. That's where its underlying is. Its futures trade at 1341, an increase in open interest of around 1.7. And traders must keep in mind that Infosys will come out with its earnings this coming Friday. That is not this Friday, but the Friday after this one. And well, I'm sure a lot of trades will start taking place with respect to its earnings. That said, Mr. Subramaniam, coming to you, what is your view on Infosys? Should one take fresh long positions at this point in time in Infosys? In that case, what levels should one keep an eye?
At the current level, though, of course, the trend broadly seems to be pretty strong on the upside. But in the immediate short term, I would be a bit careful because I think it's getting into some sort of an overbought territory, and with the results also around the corner, I would probably wait and watch. Maybe one could employ a strangle strategy, buy a 1350 call and a put. I think that would be, and because if we do have some strong moves on either side, we can accordingly sort of move with the moves and book some profits on one leg and probably hang on to the other leg. So only that sort of a strategy could be possible. So 1350 strangle would what I would recommend for buying, where we could witness, and if we do witness some sort of volatility, we could end up getting some decent gains.
That's the call on Infi. It's trading with gains in today's session as well. Let's move on and take a query from Facebook. Shravan Kumar writes to us, and he has a query on ACC. He's taken a position on ACC July futures at 1312. He's long on them. He wants to know, should he exit? I think it's come off a bit from his buy price of 1312. Currently, the July futures are at about trading somewhere about 1308 or 1309. He's saying, should he hold on? Or he's already decided a target of 1324. Amit, I'm going to come to you. ACC was very active, I believe, last week in trade. But today and yesterday, there's been some bit of profit booking which is kicked in.
Yeah, so if you see the overall structure, the stock has been a non-stop in the falling radar since the time it has violated 1600. And from 1250, a pullback was always on the cards. So it is just a pullback. I would recommend the viewer to kindly exit the long trade because it is still in the corrective wave, which is not yet over. If you look on the monthly structure, the stock is still holding below the key support of 1500 and holding quite below that. So, and even the entire cement space, I believe it is still an avoid. And ACC, definitely it is near to his buy price. You should wait for any kind of a confirmation and not trade on these kind of pullbacks.
Okay. Related to ACC, we have another query on YouTube from Gaurav Bothra, and his question is on Ambuja Cement. And he's actually simply asking what's the view on the 195 put on Ambuja Cement. Can we take a look at his futures first and see where the Ambuja Cement futures are trading? It's currently at around 202. I'm assuming that Gaurav is looking to buy the 195 put, assuming once again that he is bearish on Ambuja Cements. So, Mr. Subramaniam, in that case, considering Gaurav is bearish on Ambuja Cements and he's looking to buy the 195 July put, would you firstly recommend him to take this position? And secondly, if you would, well, what levels would you be watching out for?
Well, currently, most of the cement counters are in some sort of oversold territory. So, and last week, I think we did see some semblances of recovery coming about. And this week, of course, again, they seem to have started giving up the gains. But I would be a bit wary about buying a 195 strike put because if the counters start settling above levels of 195 200, which appears to be for the time being, so I think that would be a bit of a risk. So I would probably not look to buy into a 195 strike put. I think what he could possibly do is maybe do some sort of a covered call where you could buy the futures and sell a 210 strike call and try to play for some sort of an upside, since I believe that some sort of bottom formation is in place. Though overall the signals are still not very clear, but I would be biased to be mildly bullish rather than go very hugely short on the cement counters at the current juncture.
Okay, that's another cement counter, Ambuja Cement, for you. One more query coming in from Facebook on NCC. Shravan, who had a query on ACC, he's also long on NCC July futures at 98.6, and he's definitely making money here. He wants to know, should he be booking profits? Remember, NCC is up as it's received some orders rather of 2,060 crores in the month of June. Amit, I'm going to come to you. He's making good money, I think, of between 12 to 13,000 rupees. Would you suggest him to book profits, or he can trail stop losses here?
It's NCC, right?
Yes, Amit, NCC.
Yeah. See, the stock has taken the trendline support around 89, and it has reversed from those levels during the expiry week of June. So I believe he can trade with a revised stop loss at 97.5, and on the upside he can look forward for 106 to 108 levels where the next resistance is seen. So still it is in a pullback trend, where if it lasts more above 108 odd, it can negate this pullback trend and come back to its positive territory.
Okay, and there you have that. So that's the view on NCC. Our next query is on MCX July futures. I'm not sure how liquid these futures are, but I'm going to take this query up. We have Ram Hegde on Facebook, and he says that I have MCX July futures at around 887. The question is, should I average now or book losses? Can we take the look at the July futures currently at 720? That is a major loss at this point in time that Ram Hegde is looking at. It's a okay, so I'm going to take it over to our experts and see if they can help Ram with his position. Mr. Subramaniam, what would you advise Ram should do? He's gone long at 887, and the current stock price or the futures price is at around 720 odd levels.
Well, I think he must have taken this long position quite some time back, because even the recent spike that we saw in MCX it took it to levels of 870. I think it's more or less got it at the top of the rise. So, but right now it's almost at the brink. I mean, 700 seems to be the support from where it has shown some sort of bounce. So, no point in hanging on to the counter for too long. Ask him to probably put a stop loss at around close to 695. I think any fall below that could trigger another sharp fall in the counter, which is this counter has not exactly participated in any meaningful rally. So I think it would be better to exit the counter rather than wishing for some gains to come about, which doesn't appear to be at the current range.
Okay, that's MCX India for you. Not doing too much, actually, just about trading with cuts of 0.5%. One more query coming in on YouTube. The Shah Tiwari wants to know if he can sell the 10,600 put strike of Nifty. I think the current premium on that strike is nearly about 108 or somewhere in that range of 100 to 111 actually right now. Amit, I know you gave your views on Nifty, where currently in the short term you also suggested that you are pretty much negative. If he goes ahead and sells this put, he'll be safe till the time index is trading in that level, but at least till 10,500, since the premium is 111. But still, keeping all the factors in mind, would you suggest this is the right time to go ahead and sell the 10,600 put strike?
See, honestly, I believe it would be very aggressive strategy. However, considering Nifty overall trend, which has remained sideways for most of the time, in case if he is a compulsive trader, he can trade with a strict stop loss, because if it violates 600, definitely the risk can be unlimited. So if he's a compulsive trader, I would recommend to keep a stop at 10,600 and hold on till the time he is making money, considering the time value being eliminated. And once it starts violating 10,600, you should definitely exit. At this juncture, I would be more comfortable writing call option than put options.
There you have it. That's the view coming in on the Nifty. In general, the sentiment is not very positive, not constructive on the benchmark indices. And with that, I'm going to thank both our experts, Amit as well as Mr. Subramaniam, for joining us and taking us through their views, as well as solving some of our viewer queries. And with that, it's a wrap on this edition of the F&O Show, but lots more lined up, so stay tuned in the Bloomberg.